Hey, everybody. Thanks for joining us. Today, we are going to talk about one of my favorite stocks in the world, Disney. I'm joined by longtime Fool.com contributor Rick Munarriz. I'm really excited to get into this. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get a message from our sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube, and you can get the top 10 stocks to buy right now. Again, that is fool.com/Frankel. So, Rick, Disney is one of my biggest stock holdings. I'm pretty sure it's one of your biggest stock holdings. It's down by more than half since it peaked in 2021. Why has it been under such pressure lately?
Yeah, so there are a lot of things weighing on Disney lately. And again, yeah, it's been rough to be a Disney investor the last few years. The stock's basically lost to the market for 3 consecutive years. And this year, it started out great. It was up 37% year to date, like by early March. Been largely downhill since then. It's up just 5% as of July 22nd, roughly. S&P 500 is up 17%. So clearly, this is the fourth year in a row that it's losing to the market. A lot of things have happened. It's had a lot of disappointing stuff happening at the box office. The whole cord cutting thing, the rising cost at ESPN, Disney Plus not turning a profit. Theme parks doing relatively okay in the greater scheme of things, but attendance not nowhere close to where it was back pre-pandemic levels. So there's a lot of things that haven't gone right. But financially speaking, this isn't a stock that truly should be at half of where it was, back when the business was doing a lot worse, back in post-pandemic when it peaked at an all-time high.
So I'm a Disney annual pass holder. I know you're at the parks pretty often.
Yeah.
There's no shortage of people at the parks. I don't think that's what everyone's worried about. There's two kind of big things on my mind. So I want to take those one at a time. So the first is streaming, which you just mentioned. The streaming business has pretty much been unprofitable from the start. I think the core Disney streaming businesses, excluding ESPN, just reached an operating profit in the last quarter. Why is it so hard for Disney to make money on streaming? It doesn't seem like, like they seems like they would have the best intellectual property of any of the streaming people. It's like a built-in business that they just really had to launch. Why is it so hard to make money?
Yeah, and again, it's not just Disney. I mean, all the other major studios, Comcast with Peacock, Warner Brothers with Max, Paramount Plus, they've all struggled to get their service out there because it was an arms race for the last couple of years. And again, Disney Plus didn't even exist till 2019. So all these services have launched in recent years, and they've been putting a lot of money into content. They've been pulling movies that may not do so well at the multiplex and putting it right onto their service, investing in a lot of content, promoting their services to stand out. It's been very expensive. Outside of Netflix, it's hard to find a company that's been profitable. But yeah, Disney Plus, the direct-to-consumer segment, did turn a small operating profit in the fiscal second quarter, which was the quarter that ended in March. That ended in March. And they said the third quarter, which is the quarter we're about to report in a couple weeks, will be a step back, but expects to be profitable again in the fourth quarter. And then beyond that, they expect to build on that. So the streaming side is getting back on track. They cut costs. As CEO Bob Iger said, they're cutting $7.5 billion in annual costs. And a good chunk of that has come from their streaming content operations. So it is at least making steps back on that front. That's one of the biggest overhangs in the stock. Really, the reason why the stock hit an all-time high in 2021 was because everyone got excited about Disney Plus and how quickly it went out of the gate. And now we're seeing that, hey, money needs to be made, and now finally money is going to start to be made. So that should be definitely a negative that should turn into a positive tailwind in the next couple years.
Yeah, I mean, I think all investors understood why it wasn't making money in 2020 and 2021. Obviously, there's a lot of startup costs to rolling out a streaming service like that. You have to build out your engineering team, you have to build out your infrastructure, and it's a whole big cost structure. But at some point, investors wanted to make money. And you kind of just touched on this in the last little thing you said about movies that wouldn't do so well at the box office. That's a big question mark for a lot of investors, not just in Disney, but just across the board. We're not even going to get into like AMC and things like that. But when you look at just the movie theater business in general, I'm a real estate's kind of like my core competency. And anyone who's a landlord to the movie theater companies is getting beaten down these days. So it's not just Disney that people are pessimistic about box office about. And I know the last couple years have not been great. Of course, no one was going to the movies in 2020, 2021, and much of 22 in a lot of areas. But they've had some recent hits. The Avatar sequel last year, Inside Out 2 is in theaters right now. My daughter's actually seeing that today. And that's been, I think, what did I read? The first $1 billion movie of the year. Um, and it looks like they have a pretty nice kind of lineup of releases coming out later this year and into 2025. What are your thoughts about that part of Disney's business? Is that weighing on the stock, and do you have kind of a positive outlook for that?
Yeah, I do going forward, but there's no denying that the last year and a half, you mentioned Avatar, the Way of the Water, it reached at the late 2022, really all the way to Inside Out, basically a year and a half between they've had this legitimate billion plus global box office movie. Guardians of the Galaxy and the Little Mermaid live action did fairly well last year, but again, not at this level of blockbuster. But it wasn't just Disney sort of dropped the ball. There's no denying that. Comcast, with Oppenheimer, you had Barbie, you had the Mario Brothers movie. Comcast had a higher revenue total box office for the first time since 2015 last year. Usually Disney takes that crown easily. But looking ahead again, starting with Inside Out last month, back in June rather, and of course there's a Deadpool Wolverine. You have a Moana movie, a sequel coming out. You have a Lion King Mufasa movie coming out by the end of the year, by December. You have a lot of big movies coming out. And I think they get it now. They're not releasing as many movies as they used to, but they're making sure that they're more powerful. They can get behind it. And obviously, Inside Out 2 is a great start to people who are saying, oh, Disney's animation studios lost its touch. Great reviews, critical reviews on Rotten Tomatoes from both the critics and the audiences. And clearly, the highest grossing movie worldwide, basically since Barbie last summer. It's been that strong of a film.
Just another part of Disney I wanted to get your thoughts on is the cruise line. I've been a Disney investor for probably about a decade now, and generally speaking, the cruise line is like an afterthought. It's been a very it's a small part of the experiences division when Disney itself talks about their earnings, but it feels like they're putting a lot more effort into it now. I have to think at least some of it is the momentum you're seeing in companies like Royal Caribbean and Carnival that are getting just a surge of demand. But that's really starting to become a bigger part of the business. Do you think that's is the juice worth the squeeze? In other words, in Disney's case.
Yeah, definitely. So it has 3 boats in the next year and a half between now and the end of 2025, the calendar year of 2025. They're going to have 3 new boats, including its first mega ship. And while it's 3 boats, they already have 5 already presently sailing. It's going to more than double the capacity. This is a business that's been around since the 1990s. It's going to be that kind of big change for them to grow that quickly. And I think that they're obviously, it's not enough to move the needle. Theme parks are going to be the biggest part of its experiences business, but it recognizes the trend. And even not really related to Disney, because Tokyo Disney is the only park not owned even partially or completely by Disney. But even Japan struck a deal with Disney Cruise Line that they're going to have their own Disney cruise ship in 2028 or 2029, I believe, is when that ship's going to happen. So they are really putting a lot of muscle behind the cruising industry worldwide, and I think that's going to pay off for them as their fleet grows, and they can, they'll never be a Royal Caribbean or Carnival or Norwegian in terms of like breadth. They don't want to be. They want to be this premium, family-oriented experience, but obviously something as anyone who's gone as adults on a Disney cruise, it can be a lot of fun too.
And so let's briefly talk about what we're looking for in the future. So Disney reports its next earnings. It's its fiscal third quarter on August 7th, so in a couple weeks from when we're recording this. Later that week is the D23 event. So for those who might not be familiar, what is that and why is it so significant? And what do you expect?
Yeah, so D23 is always, it's kind of like if you're a theme park fan, as you and I are, and hopefully many of our viewers are, you love D23 because this is when Disney basically does that wizard, pulls behind the curtain. Hey, this is what's sort of happening. And they mention things that are like blue sky stuff that may or may not happen. But now they're at the point where they sort of have to announce things happening with its rival coming up with a big theme park opening next year. So you're going to see a lot of things. You're going to see what they've already said that they're doing stuff at Disneyland with Avatar, and it looked like a water ride based on the action. So it's not what they're doing. They're not copying what they've done at Animal Kingdom and Walt Disney World. So you're going to get more details on that. There's clearly a lot of they've even mentioned it just sort of in passing without promising anything about what's going to happen at Animal Kingdom to this area that used to have Primeval World, which is a roller coaster they took out, and what they may do with the dinosaur ride. They've hinted at maybe an Indiana Jones makeover like they have at Disneyland. And of course, beyond in Magic Kingdom itself, the world's largest theme park in terms of attendance the last couple of years. They have talked about what they're going to do behind Thunder Mountain, beyond Thunder Mountain, what they're calling it, this tract of land that they can work with once they have to channel their way to get guests back there. So there are things that they're working on. How much they're going to announce, who knows? But I think this year, more than ever, they're going to be under pressure when D23 rolls around. And August 10th is the day, if you want to know the exact date, that they're doing their theme park presentation in that 3-day, fan fest. There's going to be probably a lot of big news and hopefully some firm dates and firm plans instead of just general dreams of what we may do and eventually gets lost along the way.
Right, so the week of August 7th is a big one for Disney investors. We will have to do a follow-up video after we hear what's announced. Rick, thanks for joining me, and hopefully everyone enjoyed this. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.